Hello again, this is Ken Simpson following up on the presentation of the discrepancies in earnings estimates for Canada Goose. We'll start here. This is what we showed last week. This is a screenshot from the last video, and you'll see that the earnings went up to 72 cents and down to 68 and back up, and then the earnings estimates were way down here, so this was troubling. Okay, we're expecting only a 68 cent 12 trailing month from 91. Now, pay attention to these numbers. 2014 through 2016 remained the same, minus 1 cent plus 20 cents plus 25. And just a couple days ago, MarketSmith had earnings estimates of 73 cents for 2017. Now, that year's already closed. All right, shouldn't have any changes here. 2018 was estimated at 53 cents. Okay, and then pay attention to the shape of this. We're going to take a look at this in a second here. Now let's switch to today. We'll go back to the weekly and let's look at the earnings here. Look, now isn't this look a lot better? Okay, we had beautiful trend here. This behaved properly, and we have a nice forward-looking positive earnings forecast. So ended up at 83 cents. All right, and our 91 cent point disappeared. Our 73 cent point disappeared. So anyway, made a big revision here. So these three stayed the same. They put 41 cents now instead of 73 for 2017. They revised this down. You know, that's history. And they put 2018, it closed the books instead of the 53 cent estimate at plus 84 cents. All right. So this looks a lot more palatable and much more bullish for Goose than what we had before, which was a flattening of earnings. And troubled a bit by this, we'll have to email MarketSmith and see why they revised this number down. It changed a lot of things here. Now this current estimate for the current quarter hasn't been updated. They're still showing a minus 135% going forward. So you might have to pay attention to that in your watch list screening. Anyway, much more positive. You can see we're way up here on our target. One more thing before we go. They're showing a 72 PE ratio now. And if you switch to daily, it's 55. Okay. Now remember, these earnings are in Canadian dollars. If you take the 12 trailing months and you add them up, it adds up to 84 cents Canadian. Okay. It's Canadian dollars worth about 76 cents today. So that makes it about, I guess, 64 cents or so. The proper PE ratio for this is about 88 or 89 on this current price. So on the weekly, it shows 72, and on the daily, it shows 55, and the proper PE ratio is about 90 as of right now. So you have to pay attention to the Canadian dollars versus US dollars, and kind of a bug there in MarketSmith. All right. And thanks for watching. If you have any comments, please comment to the group. Thanks.